Good morning, guys. It's Tuesday, the 30th of November, the end of another month, coming to the last month of the quarter, last month of the year. 2021 is getting really, really close to ending here. So we're pushing hard to make things happen for the end of the year. Starting to see, well, I mean, a lot more stuff coming in. You know, we're seeing a lot more contracts hitting. So hopefully it means inventories are opening like we were talking before. I can't speak to how that's all working, but I was thinking that a lot of it may have to do with the fact that some of your larger organizations, after what happened with Zillow, maybe not out there buying as hard as they were. I can't say that for certain. I don't have the data. All I can tell you is that we've got some floods of contracts coming in that are reminiscent of a previous time. So that's good news, right? Hopefully that is the news that continues. Hopefully that's something we continue to see a trend of. Me personally, I'm in a cash out refinance on my house, my personal residence. An interesting thing, I locked it this last week, 3.625%. That's what I locked at a cash out primary residence. I got an 800 plus credit score, right? I've got a debt to income ratio that's like in the teens, right? My ratio is very low. I don't owe anything but on houses. And I don't have any other debt. I mean, I use a credit card all the time for expenses and I pay it off. So that's just what it is, right? That's where rates are at right now. I know a lot of people are freaking out about them going up a little bit, but we talk too much about inflation and what that does. So, the interest rate freak out, I think you guys need to be really, really calm about it. What's really interesting, and I'll show you here, the market actually turned around since I locked, which is, maybe I was the sacrificial lamb on this thing, kind of hard to say. In fact, let me make sure I'm doing the right screen share here because I don't get to really tell which screen that I'm doing. So let me do this one. Here we go. It may be the same screen. So if you look back here, this is something I was talking about. I had a concern of before, right? If you start seeing we were bouncing off this particular line, every time we hit it, come off it, big drops before I crawl back above it. COVID pushed us above it. COVID to the rescue again, interestingly enough. So we had the new Omicron, whatever the heck they want to call that variant coming out. I'm going to zoom in here a little bit more on this. And that's what happened this last week. Right here, we were below this line. It was very, very, very risky, right? We're going to see that drop. Now, this was all COVID related here, but we dropped it. Then the new variant popping up in Africa. And what happens? Major stock sell off. That major stock sell off pushed us into a major jump into the bonds. Take a look at this. A jump up, literally over the line here, climbed up. Another jump up. Today, another jump up. Now, I locked back here last week. So if I would have locked in here, I'd probably be back down into 3.3 maybe, but I'm not going to bitch about it because that's the way things work. I protected myself against what I knew was more than likely going to happen. Who knew that there was going to be a COVID release, another one that's going to force us? I had no clue. So I just sit in my situation. I made the right choice, not knowing a variable that we had no idea how that variable is going to be out there and that was going to affect the market, but it did. But look where we're at. We're at this downward trend line. This, technically speaking, we're in this downward trend line. I believe we might still keep bouncing here. Now, hard to say. We might have something that pushes us above it, just like we did here. But ultimately, we're still what looks like to be heading in a negative interest rate market. But for the time being, we've got some safe stuff. Now, let's take a look at what we're seeing as far as mortgage-backed securities for the investor. So what I'm showing here for investors, if you take a look at this here, we haven't seen as much. See here now, it looks like it's popping up. Not seeing as much wild movement, right? There's not big gaps. There's not gap up jumps. It looks like everything has been, all these gaps have been closed. There's not looking at these massive openings in the charts, which typically those are going to want to close. So I don't know how that's going to play out with the market over the coming days. But if you look at that, we're still in pretty flat territory, comparatively speaking. I think we're going to be okay for the real estate investors. Still going to be in that lower 4 range for your 740 plus credit scores, maybe down into the higher 3s. Kind of hard to say in that. Just it's deal by deal. We have to look at that. But when we talk about the inflation piece, it does not matter. Myself, this is such cheap money. Even if at the rate that I got on my cash out refi on my house, I'm going to take that and buy more investment properties. I'm making money on that money. That money's not costing me anything. In fact, they're losing money by lending it to me. So go about things the same way, press forward. Don't worry so much about what's going on with the interest rates. We are assured inflation, the way things are going. And you're assured that that rate will stay the same. Your costs will be locked in for 30 years. Nothing to stress about. Go to the page, aaron.chapman.com, scroll down, look at the donate thing, see how things are going there. People are still jumping in and putting that little bit in there. If you want a little bit more to put on your taxes, it's a good place to put it. Appreciate you guys, and we'll talk to you guys on Friday.